Is the real estate market going to crash? It's a question that seems to be on everyone's mind right now. With all the crazy stuff that's happening right now in the economy, the real estate market, the stock market, international tensions, etc., it's normal to feel a little freaked out and uncertain, so I thought it might be helpful to give you a real-time snapshot of what I'm seeing right now and where I think it's going. Hi, I'm Greg Davis with Greg Davis Real Estate, powered by Vanguard Realty Alliance LLC, and today I wanted to talk to you about our local market and the impact of consumer sentiment. As I've said before, real estate's hyper-local, but consumer sentiment is driving some cooling in the marketplace right now. So what do I mean by that? Well, the media is working. Everybody's talking about the market collapsing and the real estate market going down, so it's only natural that consumers are starting to worry and are feeling like something's going to change. All this then drives a herd mentality where people all start to move in one direction. So what does this look like right here in the Westchester, Kennett, Downingtown, Unionville-Chadds Ford area school districts? Well, let's take a look at the data. If you watched my market update last month, I covered what happened in our market in the first half of the year, and while there's always a data lag as it commonly takes 30 to 45 days from contract to closing, the data showed a strong local market despite what's happening, but consumer sentiment is creeping in for sure. Here's the stats for July for single-family homes excluding new construction in our area. As this graph shows, the median list price dropped from $550,000 in June to $515,000 in July, and the median sales price dropped from $575,000 to $531,000. So you might look at this and think, the market's crashing. Well, it's certainly cooling, and I'll be keeping an eye on the data for sure going forward, but keep in mind that despite the drop, and as this graph shows, homes are still selling for almost 124% of list price, which is still above the median of 120% for the year to date. Also, with the exception of June, list prices are still significantly above where they were in the prior months. Up next, let's take a look at inventory and days on market. As this graph shows, the median number of days on market for July was 6 days, and as you can also see, that number's remained pretty consistent all year long. Interestingly enough though, and also as this graph shows, inventory was down again in July to its lowest point since April at 1.1 months of inventory. So we didn't see any evidence of fear selling by sellers in an attempt to get the highest price to hedge against fears of a crash. And finally, let's look at closed sales for July. As this graph shows, closed sales for July dropped from 306 in June to 277 in July. But that was likely driven by the reduced inventory available, and with the exception of June, it's still way above the numbers for the previous months of the year. So what does it all mean? Well, once again, I need to remind you that real estate is hyper-local, with the market here in the Westchester, Kennett, Downingtown, and Unionville-Chadds Ford area school districts remains strong. We're continuing to see relatively low inventory, and we still have relatively strong buyer demand. Yeah, I am starting to see more price decreases, but I believe that's also driven by consumer sentiment. You see, sellers and even agents have become so used to homes selling so quickly, with multiple offers, no contingencies, well over list price, that they're trapped in that short-term mindset, mistakenly believing that that's actually reality. As a result, some agents are using recent comps that aren't allowing for the market softening. This means that they're overpricing homes, and when the house doesn't get any offers after 3 or 4 days on the market, the sellers and the agents think that something's horribly wrong and immediately drop the price out of fear rather than pricing it right for the new market in the first place. We've also had a lot of brand new agents that lack experience getting into the business while the market was hot. So not only do they struggle to properly price homes, but they also lack the wisdom of going through various markets. They also don't know that it's commonplace for a home to be on the market for up to a month in a more neutral or balanced market, or how to properly negotiate now that inspections and other contingencies are becoming commonplace in deals once again. Deciding to buy or sell is a big decision, and it's normal to have a lot of questions about the process. That's why it's super important to work with someone you can trust and rely on to stand there with you, to be a resource, and to guide you through all of it. Just give me a call and we'll set up a time to sit down and have a no-pressure strategy session to address all your concerns and to review some options together.